First of all, I want to thank you for coming. You honor us. I should declare right off the bat that I'm a friend of Hank's. I've been so for some years. I admired him before he took the job. I admire him a lot more after the job he's done as Secretary of the Treasury. The name of this book is On the Brink, and that's exactly where we were in September and October of 2008. At that time, our economy, our financial world went into cardiac arrest. And we had 4 people in the operating room that we were very fortunate as a country to have in place. We had Hank, we had Ben Bernanke, we had Tim Geithner, and we had Sheila Bair, the head of the FDIC. And I know a lot of people in finance, I know a lot of people in business, I know a lot of people in government, and I can't think of 4 that would have done a better job of getting us through that. Now, it's kind of fashionable now to look back and pick at one little aspect or another of what was happening then, but our country's financial system froze up during that period. Some of you in this room were at a party I was at in September of 2008 when the talk was, are money market funds safe? Now, when you have 3.5 or more trillion of funds held by 30 million people who on a Sunday night are worrying about whether they can get their money, that money was half of all the deposits held by U.S. banks at the time. You have a panic. You had commercial paper freeze up entirely, and you had some of the biggest companies in the United States, and some of them are described in this book, that worried about whether they were going to meet their payrolls in a short period of time. You had the 6th largest bank in the country in terms of domestic deposits, Washington Mutual, fail over a weekend. You had the 3rd largest bank, Wachovia, that needed a shotgun marriage on a Monday morning to survive. Most interestingly, this book starts in early September when Freddie Mac and Fannie Mae essentially were broke. Here are 2 institutions that guaranteed 40% or so of all the residential mortgages in the United States, whose debt was held all over the world in very significant amounts, including by foreign governments that would not have taken kindly to a default, Freddie and Fannie. You had them owning a very large portfolio of mortgages themselves, and like I say, in early September, they both were broke. It's worth noting for those who take shots at some of the people who were operating during September and October, that those 2 institutions, Freddie and Fannie, were chartered by Congress and were ruled by Congress. And for those who have heard them criticize the leverage in the banking system, it should be also noted that they allowed Freddie and Fannie to operate with a 40-to-1 leverage ratio, and they let them guarantee over 100 times the amount of capital they had in mortgage guarantees. So these 2 institutions, which were vital to the mortgage market, were vital to the very integrity of the United States, and which had received, in this complicated Hank's problem, in a very short period before September, the watchdog agency that Congress had established to watch these 2 agencies had given them a clean bill of health. And that clean bill of health, it might be fun to go back and read that now. Well, let's get on to Hank's book. And you know, when I got this book, I got a little early, and I expected to learn a lot about the financial crisis, and I did. But I didn't realize that I'd also learned something about how to attract women. It's a little late, I realize, but Hank had a surefire approach, which, when he took Wendy out on their first date in Boston, I would like you to describe it. If you even want to elaborate on it a little bit, Hank, I'd like to hear about it.
Let me say before I do that, Warren, first of all, I'm just delighted to be here today in Omaha. If you had another foot of snow, it would be just like Washington. And again, I've been a longtime friend and admirer of Warren's, and he was just a real pillar of strength and a source of strength for me during the credit crisis. Now, Warren was referring to something in the book. I was not a model of maturity when I was a senior at Dartmouth College. And I had my first date with Wendy. We were at the Boston Pops, and she wasn't very impressed when I made my program into a paper plane and sailed it at Arthur Fiedler. So, but I.
Did you hit him?
No. And it didn't. But she gave me another chance.
But didn't she go home early that night?
Yeah. She went home early that night.
Yeah.
And so,
but fortunately, he got a second chance.
You're right.
And Hank, tell us a little bit about. Hank's he says in the book, he says, I'm a tough guy. I forget where at what point you said that. But he was a wrestler at high school. He was all Ivy at Dartmouth as a tackle and everything. But when the president asked him to become Secretary of the Treasury, and Hank's initial reaction was not to do it, but he decided to do it. But he had one big worry, and I think this crowd might be interested in knowing what makes a grown man tremble.
Well, it was Warren is talking about my mom, and I'm quite close to my mother. She's a strong woman. She's very engaged and interested in politics and policy, and she was not an admirer of George Bush, and very unhappy with the war, and very interested in women's issues and so on. And so there had been a fair amount of speculation in the press that I might go to Washington, and I had turned down the opportunity a couple of times, and I had assured her that I was not going to go because I had no intent of going. But then when I had reversed myself and decided very suddenly it was the right thing to do not to say no to my country, I was in Barrington, Illinois, where we live and still have our primary residence, and I was there on Memorial Day weekend because the president was going to make the announcement on the Tuesday after Memorial Day weekend. So I was going to see my mom. Unfortunately, at church, we were at church together. I had a longtime friend ask me about what I was doing next, and I told her. And of course, she went up to my mom and said, "Isn't this great, Mariana?" And Mom didn't think it was great. So when I arrived up to tell my mom, she already had known about it, and and I didn't see her sob much, but she was sobbing and very angry and crying, and said to me that I'd started with Nixon and now I was going to end up with Bush and I deserved everything I got, and that I was jumping on a sinking ship. But I will say this though, and at the end I say that by the time I'd finished in Washington, my mother had a different a different opinion of George W. Bush, but it's not a good way to start off, and Wendy wasn't much happier with me. So.
Hank, one of the most interesting things I found in the book, and I'd not heard a word about this before, was your account of how some top Russian officials had gone to some top Chinese officials with the suggestion, essentially, that they start dumping the bonds of probably Freddie and Fannie at that time. And that almost sounds like a bear raid. I mean, I thought that was the sort of thing that just the evil guys in Wall Street did. But tell me about that.
Well, it never happened, but we were very, very concerned about stabilizing Fannie and Freddie because, as Warren said, there's $5.4 trillion of securities that were either insured or issued directly by these institutions. They are highly levered institutions, and these securities were held, I think, about $1.7 trillion outside of the U.S. The biggest portion was inside the U.S. And we had I'd been trying to get reform legislation from Congress beginning in 2006 and to get the kinds of reforms we needed, but we were unable to get action until they were just on the edge. And so we were able to go to Congress, get the authorities, and then as we needed to really spend time poring over their books, understanding the financial situation. Well, I had In the book, I recount that I was in China for the Olympics, and there it was given to understand that the Chinese had been approached by the Russians with a suggestion that maybe they could sell some of the securities together, maybe to test our resolve. Who knows why? But that got my.
Why do you think?
Well, I would say that would probably to just. I don't know why, but we'd had so many conversations with the Russians, the Chinese, and everyone else. I just knew that just any kind of sudden selling would have really spooked the markets. And I would say it never happened, but it was when some people say to me, well, just about everything bad that could have happened did happen, I say not quite. It felt that way sometimes, but I worried about the possibility of a sudden decline in the dollar or other things that never happened. And one of the biggest concerns I had was getting Fannie and Freddie stabilized. And in a sense, we tell the story of how very suddenly we put them into conservatorship, which was essentially guaranteeing their debt, because it was in essence an implicit obligation by the United States of America. It was sort of like the banks had their sieves and conduits which were off balance sheet and with implicit guarantees. Well, that was a little bit like what Fannie and Freddie were. And we were racing against time to stabilize those before we knew some bad earnings were going to be coming out from the banking sector, and particularly the Lehman Brothers losses. So that was a race against time. And we were fortunate that we were able to get it done without the markets becoming spooked or unsettled. So that's why I was, what I'd heard in China got my full attention.
There's a front page story in the Journal this morning about Freddie and Fannie, and it's very, very much worth reading. And I believe it said that there's now $111 billion that's been put in by the federal government, but that it's expected that much more will. So in effect, it presently looks like the federal government will lose more money in Freddie and Fannie than in AIG by some margin.
Well, Warren, as I look at these programs overall, okay, we will get every penny we put into the banks back, and then with a profit.
Yeah, I think you're right.
And I think when you look at all the other programs, we may be surprised at what we get back. And actually, even on Freddie and Fannie, I'm thinking the Fed will make a lot of money by buying and holding those securities. But you're right in terms of the losses. And to me, the important thing about Freddie and Fannie is right now, the U.S. needs them playing the role they're playing. But one of the things that got us into this problem is not just Freddie and Fannie, but if you look at the weight of all of our programs to stimulate housing. And it just has gone too far. And Freddie and Fannie are not going to be able to stay in their present form. They need to be, I think their mission needs to be shrunk. They need to be restructured in very, very fundamental ways. But right now, we need them where they are. But I think how we unwind this situation is going to be very important.
When you were getting grilled by Congress and they would point out how there was too much leverage in the banking system, did you ever get tempted to say that the institution that they ran had the most leverage of all?
I got tempted to say a lot of things, Warren, but I resisted that temptation, because one of the things that I am pleased about was that I was able to build enough relationships on both sides of the aisle that Congress did act before the system collapsed.
Yeah.
And if it had collapsed, we would have easily had 25% unemployment in this country. It would have been a terrible situation. And the crisis, the book is to a large extent the story of the collision of market forces and political forces. And the crisis came at in many ways the worst time with an election on the horizon. And so what I needed to do was to get action from Congress, and actually what we got on Freddie and Fannie, which was unlimited authorities. I used the word unspecified.
That's the kind I like.
It sounded better, but we needed those because it was. But I had to keep reminding people that I didn't design this thing and didn't create it.
Hank, you had relations with the Chinese long before this, and you used them to good effect during the crisis. I think you told me you've been to China maybe 70 times or so. What would be the American public's greatest misconception about the Chinese and their economic system?
Well, I do believe there's a lot of misconceptions that the Americans have even about our own economic system. You know, it is, and so. But I think that the thing that we all need to keep in mind is we're operating in a global economy, and so when other important economies don't do well, it hurts us. Just like when we don't do well, it hurts others. And so the worst thing that could happen to us, and that could have happened to us during the crisis, would be to have had the Chinese economy falter and stop growing. And looking ahead, we need China to keep doing well. It's in our best interest to have them keep doing well. Now there are plenty of differences, and there are differences in the economic area and in other areas. But I think that the most important thing for Americans to understand is that there is a relationship where we're both, to a large extent, dependent upon the other. We of course, in the U.S., we don't save enough. Excuse me. I think this. Can you hear me? Okay. So in the U.S., we don't save enough. We have a tendency to save too little as a people and as a nation. We borrow too much, and so we, the Chinese savings and capital are very important to our capital markets. Now, the Chinese save too much, and they need to continue to open up their economy and continue to open it up to competition, to move forward with the reform process, to reform their currency, to move more quickly to a market-driven currency, all those things. And so there's very important differences, but we just need to remember that this is a relationship we need to get right, and we need to work very hard to get it right.
And when you would tell them that in much more gentle terms from time to time, and what sort of response did you get when you talk to them about saving more and so on, or spending more?
I would simply say that one of the things we started with under George Bush was a strategic economic dialogue, which is being carried on. And what I generally said, see, we agreed on principle. So they agreed to they needed to open up their economy to competition, needed to continue to move the renminbi, which is their currency, so it was to a greater extent determined by the market. But we agreed in principle and the philosophy, but it was a matter of speed. And so I would be thinking they needed to move it this far in this period of time, and they were thinking they needed to move it this far in this period of time. But we talked very directly about it, and I think the thing that you need to remember is that when dealing with the Chinese or any other sovereign nation, we need to put it in terms of what it means to China and their people. And I was just totally convinced that to the extent they sped up the process of reform, it was only going to benefit them and help them get where they want to get over the longer term. And I would say to them, I believe in free trade and open markets, but you'll make it easier for me to fight to keep our markets open if you speed up the process of opening up your markets. But I felt we got very good results. If you look at the history and you look at what happened to the currency when I had the dialogue with the Chinese, I think the record will show that that it moved. I was very proud of this 10-year framework on energy and the environment, because again, we are not going to solve the issues of climate and some of the environmental issues we have and energy issues unless you get the two biggest among the two biggest importers of oil and the two biggest emitters of carbon to work together. And there's a lot we can do working together between our two countries. And again, I'm a big believer in engagement, because there's very little you can do in this world that's important globally that's done on a unilateral basis.
You mentioned President Bush. I'm a little bit like your mother. In fact, I want to get to meet her now.
Remember, she's changed her mind now.
Well, when I get through with her, maybe she'll change back. But I did, through the book, I got more appreciation for what he did in this particular situation. In fact, I've read various economists, eloquent ones, Adam Smith or David Ricardo or Keynes and all of that, but I really have never heard a more eloquent statement that succinctly summed up the economic world than George Bush made in September, I think, of 2008, when he said, in a memorable 10 words, he said, "If money doesn't loosen up, this sucker can go down." Tell us. I mean, that really hit her. It was like the Gettysburg Address, short but to the point. As I read the book, I really did gain an appreciation for the fact that he understood what was going on, and he understood what needed to be done. Was there ever a time that you went to him with proposals that he shot you down on?
No, because he was only surprised when I was surprised. And I was surprised more than once.
Yeah.
But
what was the biggest surprise while we get into that?
Well, but I would say that I spoke to him. One of the things I'd learned, Warren, from my previous career is no matter what you negotiate, I could have all kinds of understandings about the relationship we would have, but if I didn't have the right relationship with the president, it wasn't going to be his fault, it was going to be my fault. And so I had a year before the crisis to get to know the president, to work with him. And remember, he went to business school, he had a good fundamental understanding of markets and economic issues, he cared about them. And so the conflict he dealt with was the same conflict I dealt with, or anybody who had watched markets. We believe in the United States of America that risk takers should bear the responsibility for their own losses. And so big interventions were not something, I didn't go to Washington to do that, and he certainly didn't. But from day one, he understood that the financial markets were about our economy and jobs. So repeatedly, I'd be coming to him and I wouldn't have to sell him. Halfway through the conversation, he would buck me up and say, "Listen, Hank, we'll get through this. We're not always going to look good. This is going to be politically unpopular, but we're not going to let our economy go down. We're going to do what it takes to save jobs, to save the economy." And that was his point of view. And he was, you talk about my mother, and sometimes he was almost like my mother to me. He would be telling me I needed to work out, needed to get more sleep. So,
in terms of the other people on the political stage, it seemed to me that going up to the election, that you probably felt that Barack Obama was both more knowledgeable and more interested in what was going on in the financial crisis than John McCain. Is that a fair assessment?
Well, what I'd say, it's no doubt fair that the conversations I had with John McCain weren't as frequent as they were with Barack Obama. they were more difficult, and he certainly gave me more anxiety about all of that. And you know, who's now President Obama was attentive, engaged, and I felt comfortable he was going to support what we needed to do. But I'm quite grateful to John McCain because, and have real respect for him, because let me tell you, there was an election 6 weeks away when we went to Congress, and there's no way we would have, in my judgment, got the TARP if John McCain had come out against it. And if he had played the populist card, we would have been left defenseless. And so as I look back, I'm increasingly grateful of the way he handled himself during this period. But during the time he gave, you know, I lost a few hours of sleep.
Well, Hank, yeah, you describe it one place in there. You've got something there where you say you issued a veiled threat, and I read what you said. It didn't sound very veiled to me. I mean, to McCain.
Well, that was when he came back. You know, there was quite a scene was when he interrupted his campaign to come back, and I remember I was testifying at the time, and Michelle Davis, who's here with me today, and was sitting behind me, and when I was testifying, and handed me a note, and I mean, my blood sort of ran cold right there, and she said to me, "Now, if someone asks you about John McCain coming back, just simply say, I welcome the involvement of, you know, of everyone in this," and so on, because I think she was afraid what might come out of my mouth.
Did Michelle hand you any notes before we came up here? Or?
No. She talked me on the flight on the way down. But in any event, but as it turns out, again, it was a couple days of anxiety, but again, John McCain, when he was back, spent time with the House Republicans, rallying them, and you know, and it was, so he did his part, and then even after we got the TARP, he did not jump on or criticize some of the things we had done, which again were very unpopular. You know, American people, and I'm proud of the fact that on one level, the American people, none of us like bailouts, and so again, it was, you know, I looked at a poll once at some time, you know, after the election, but after we'd done some of the things we'd done, and I think this may be slightly exaggerated, but I recall that something like 93% of the American people opposed the bailouts and 60% opposed torture. And so that, and yet 70% were worried that we would go into something much worse than a bad recession. And so we've never been able to explain to the American people this wasn't for Wall Street, this was for them.
Hank, you had these consultations with Obama, although I understand it sort of ended after the election, but...
Leave out the sort of part, yeah.
Both the president and members of the administration have repeatedly said during the past year that they really didn't anticipate how tough things would be in the economy. But from the message you were giving them, I mean, you expected things this tough, didn't you, or am I wrong on that?
Well, Warren, I'd ask you sort of what you expected, because I did not expect them this tough. I expected them, I knew when we went up, there's a scene in the book where we talk about Ben Bernanke and Chris Cox and I went up September 18th to meet with Congress and tell them we're going to need these authorities. And the difficulty we had at that time was, as Warren said much better than I could, the arteries of the financial system were freezing up. And so I knew with a certainty that business was going to turn down, because when you have companies that it's uncertain whether they're going to be able to raise their short-term funding, most CFOs are going to go to the CEO and say, hey, boss, I may not be able to have all the funding you'd like for the next 30 days, so what does a prudent company do? They start cutting back. But Congress hadn't seen this yet, and so they hadn't seen it yet in their district. So I knew with a certainty it was going to get worse. I'm not sure I knew it was going to be 10% unemployment, but I knew it was going to be bad. And so then when and I knew that if they didn't do something and it collapsed, then the businesses wouldn't be able to fund themselves, wouldn't be able to pay for the inventories and pay suppliers, and would let employees go, and that would ripple through the economy, and we'd have Armageddon. But so then when the economy did turn down, we had this terrible situation of, as Congress saw it, because Congress saw it the way the American people had seen it, we went up and said, give us these authorities, and if you don't, we're going to be in deep doo-doo. You know, it's going to be bad. Well, they gave us the authorities, and we were in deep doo-doo. And as Barney Frank said, it's very hard to get credit for preventing a disaster that people never saw or could see.
Did you really get down on your knees to plead with Nancy Pelosi?
I did, but you have to understand that I was in a cabinet room witnessing when both, Senator McCain and Senator Obama were there in the middle of the campaign with the congressional leaders, where not only did we not come together, it broke out in, people didn't come to physical blows, but there were verbal blows, and it was chaos. And then the Democrats assembled in the Roosevelt Room, and I went in uninvited, and I did it just to try to break the tension and to get a smile or laughter, and it didn't really have its desired effect, because I remember it. As I recount in the book, I said, please don't go out and blow this thing up. And the speaker said to me, we're not the ones that are blowing it up. And she was right.
Hank, you've got a great investment background. You've seen how government operate here, abroad. Nobody's had a better perch from which to view the economy and to make judgments about the economy going forward. As I understand it, when you were secretary, you had to have your money in a blind trust. And now the blind trust presumably is over. I don't want you to give us the names of stocks, although if you want to do it, you're free to do it. But give us an idea of the composition in terms of bonds, stocks, whatever of the portfolio which you've had a chance to establish here in recent months.
Well, Warren, first of all, you are a great investor. You do very good, very careful work. One of the things I learned during my career is I'm not a great investor. So I need to find great investors. I believe the system is, the financial system is stable. Banking system's in better shape. I do believe clearly the recovery process has begun. You and I have a common worry about the fiscal crisis in this country.
I'm going to get to that.
And you have one of the best lines I've ever heard as it relates to that. But in any event, so you just need to understand also that what Wendy and I are looking to do, we're going to devote the balance of our careers to conservation and the environment, and that's where our money's going. So I am not looking to make more. I'd like to keep what I have. And so I'm not looking at it with a really long-term horizon, because I continue to believe with a long-term horizon, the best way is to invest in high-quality companies and in stocks. That's what I believe in. And if I was a young person, I'd be looking at companies that have got good, strong market positions for the long term. So I have a lot of what I have is in fixed income markets and money markets and cash, because but then the others I have tend to be in growth equities, because I still believe that the economy can go down and sideways and whatever, but outstanding, well-managed companies, and particularly companies that know how to operate globally, will prosper over a long period of time. And that's the way you need to look at investments, is over a period of time. I don't put too much stake in quarterly economic data, what happened to the stock market today or tomorrow. I think the right way to look at it for a younger person is over a longer period of time.
I'm interested that you said you have a substantial amount in fixed income. Does that mean that you don't worry about a decline in the value of currency?
Well, Warren, you're certainly not going to get a former Treasury Secretary talking.
But I could try.
Because I really do believe that, and I worked very hard at this, that a strong dollar is just very much in our interest and essential to the success and the preeminence of the United States of America. And I believe that the best way to have a strong dollar is, again, looking at it over a long-term view, have a strong economy, and to have fiscal discipline. Now, I'm not going to give you a view as to what I think what's going to happen with the dollar in the next 5 or 10 years, but which is what I'm really focused on, because we intend to give away a lot of the money over over a relatively short period of time.
So if I made you a trustee for my children, and I said you got to buy fixed income, would you prefer TIPS bonds, which are the Treasury inflation protected type, or the straight bonds?
I'd go to you, Warren, and I'd ask you.
I give up. Uncle.
I would ask you, and I'd take your advice. But I would ask myself the question, which really gets back to where you're going to go, which is that, again, which gets to currency a little bit. I have spent a lot of time outside of this country, and I've spent time in all of the major economies. And believe me, every other major economy, China included, has many more really significant challenges and problems than we do. They really do. And we're the richest, strongest economy in the world, but we have to deal with a relatively few very important challenges. And the biggest one is the fiscal crisis. And I shouldn't call it a crisis, because it's not a crisis immediately, it's a challenge immediately. But one of the things I learned, and one of the things I write about in this book, is that it's very difficult to get government to act, to get Congress to act, and do anything that's big and difficult and controversial unless there's an immediate crisis. We had an immediate crisis, and we still haven't got the regulatory reform we need. And again, that is something that's absolutely critical. But so I have no doubt that we will deal with this fiscal challenge at some point in time. But the earlier we deal with it, the less costly it'll be, the greater our nation will be, the stronger our nation will be, and the less burden the younger generation will have to bear. And so that's...
Hank, let's go back to the fall of 2008 again, and that very fateful weekend of September 12th to 15th. At that point, really on the Friday, it really wasn't known the extent of AIG's problems, even though they were going to just come cascading in a few days. But you did have this big problem with Lehman, and you called together a group of people in Wall Street, and you thought you had Barclays signed up, and I think they wanted to be signed up, but they ran into problems with the British government subsequently. But it seems to me that on, forgetting about Lehman even, if you had Merrill Lynch that had followed a Lehman bankruptcy, I think you and I would agree that Merrill would have gone almost instantly.
Right.
What would have happened if the B of A hadn't made the deal on Merrill on that Sunday?
Oh, it would have. They wouldn't have lasted, in my judgment. Wouldn't have lasted a week. What people miss, and I think it's easy to miss, was this was a doozy. These excesses had been building up for a long time. I knew we were overdue for a credit crisis, and I told the president that when I came to Washington, but I didn't expect anything of this magnitude. But it had been building up, and it had been building up in the United States and in Europe. And it's, as you can see from reading the papers, it's still working its way through the European system, but it had been building up for a long time. And the institutions have been sitting on losses. We'd been pressing them to recognize losses, raise capital. But so simultaneously, we had, on the same weekend, we learned about the extent of AIG's problems on Saturday. Lehman, the run had already started on Lehman. Merrill was going to be right there. So you had those three institutions. And, as Warren said, we had Washington Mutual, shortly thereafter in Wachovia. And then we had, over the next weeks, we'd had 6 European nations have to step in and recognizing institutions. So this was coming at us pretty quickly from all sides.
And it's ironic, but in effect, I think you talked about Ken Lewis having an appetite for deals or something of the sort in there. Yeah. But if in effect he hadn't made this deal, which does not look like necessarily the greatest deal, he offered a 70% premium on the day when probably the next day the stock might have been at zero. But didn't he in effect kind of save the system for us?
Well, I tell you, he was a confident, decisive CEO, and there's no doubt that was very much of a stabilizing action.
Do you think we would have gotten to Tuesday on AIG if there hadn't been action on Merrill that day?
Boy, I don't know what would have happened, because I don't think, Warren, I don't think we could have taken one other big institution bail. Do you?
No.
It just, the system, it is, I think the thing that's hard for people to understand is, we had 10 institutions that had, 50 to 60% of the financial assets in this country, and they're so interconnected. I think we would have, in many ways, we were, as bad as this is, and it's terrible, and but when we look at what could have happened, we're pretty fortunate.
And Hank, the British had given you that kind of British-like veiled warning about the situation a couple of days earlier. I forget, it was Alistair or something. But in effect, they blocked the Barclays acquisition of Lehman. Do you think they understood what the consequences were?
I don't know everything they understood, but remember there was a requirement for a shareholder vote.
Yeah, that was,
and they didn't.
But we overcame a lot of things in this country, requirements.
That's right. And then what we needed was we needed a buyer that could do what J.P. Morgan did with Bear Stearns, which was fill the capital hole and then guarantee the trading book during the shareholder vote because there was no authority to do this in the U.S. And what I think people have a hard time understanding, because we're the United States of America, and I had a hard time understanding until I started turning over every stone to see what authorities we have, that there was no authority to guarantee liabilities or to put capital into institutions. But in any event, I'm not sure what, but the British were. I had said in the book, I had used some rash language when I was disappointed. But as I said in the book, as I reflected on it, they obviously had their own issues they were looking at, and the regulator, it was for them a very difficult, it must have been a very difficult decision to let one of their banks go ahead and in the middle of a run on Lehman Brothers step in and make that acquisition and be confident that they had the wherewithal to do that.
Hank, Lehman did go down
Yeah.
on that Sunday, and Barclays then bought a limited part
Yeah.
in a much smaller transaction. And I think it was Tuesday or Wednesday that the British authority, or I guess the British authorities, said that if you had an account with Lehman, even were keeping your securities there, you couldn't take it out. You couldn't. I mean, they froze the accounts basically, which
Yeah.
I gather came as a big surprise to you. It certainly came as a big surprise to me.
That was, I think, that shocked the market. So it was. My recollection is it was Tuesday, but I could be wrong. But because I recall learning about it Tuesday, and that was actually the day that of the AIG rescue. But what happened was the collateral, third-party customer and collateral accounts, in the broken dealer and others, were frozen for a while, and investors needed to know that their accounts were safe. And of course, when they weren't with Lehman Brothers in the UK, then there was a big erosion of confidence in the investment banking model, the viability of the investment banking model.
Yeah, that wouldn't have happened in the United States. I mean, you would have had access to your securities. And,
Yeah.
And as I remember that was it didn't get publicized much, but it was a huge shock. Did they consult?
If they did, it wasn't with me. Now remember, the SEC was the regulator. So the SEC was the regulator for Lehman Brothers, and was the one that had the lead in preparing for the bankruptcy. Because we knew that was going to be a possibility. We hoped to avoid it, and they were the ones that would have been talking to the various authorities during that period of time. But it sure came as a surprise to a lot of investors and a surprise to me.
Hank, you and I own, and we own it entirely, a huge investment banking and trading firm, and it's our only family asset. We can't sell it. And we've got all these talented people, and we're making lots of money. You're head of the compensation committee. What sort of an arrangement do you have with them? Can anybody make 25 or 50 million a year? Or are you going to how are you going to treat these people so that they keep making money for us, and they don't leave and go someplace else?
Well, I would say we have to talk about when it is we're doing this and when it is we're making this decision.
Well, let's say we're doing it today.
Well, today, Warren, and you've got to know that you and I, as I say and as I write in the book, and I would have these conversations with Wendy all the time during benign periods, that I think that the compensation levels on Wall Street, are out of whack. Okay, so I just believe that just in general during benign times, and I think you would too. Just as a general in terms of how you, and number one, and number two, today, in light of everything that's going on, and the fact that the taxpayer came in to, and granted that the reason the taxpayer did what was to prevent calamity, but it came in and helped the whole financial system. So not just the big banks and investment banks, but hedge funds, everyone. I think that today restraint is very much in order by the top people, and I think the anger is coming from, hey, if you have losses, you're supposed to bear responsibility for those losses. So the way I've talked about it is, I've talked about it and said, I'd like to see this anger channeled, and I'd like to see Congress feel, pressure. And I know they're working on it very hard to get the regulatory reform we need so that you don't need to ever have taxpayers come in and prop up, bail out in their present form a failing financial institution. We need resolution authority so any financial institution, any type of financial institution, if it's going to fail, can be liquidated outside of the bankruptcy process in a way in which it doesn't take the financial system down and the economy down with that. So I would like to see Congress get that done and get the systemic risk regulator that can look at every institution, no matter what the size is and type, and if they see risks that are imprudent, restrain them. So I'd like to see that. Now, in terms of longer-term compensation, clearly you need compensation. My view is the same as yours, that it should be in equity for the high-paid people, and it should be something that rewards long-term performance. That's the only thing that counts, long-term performance, and aligns the incentives of the individuals with the company and its shareholders.
Are we getting the hook?
Gentlemen, we're done.
Okay. Thank you.
Warren, thank you so much. Thank you a lot.